Good morning. Justin Pratt, good morning. Is that ceviche? Good morning, guys. Trades with Rage. What do I think of GH? GH was on my watch list. I put it on the watch list for the group. We'll see if it gets going over the, if this thing's going to have a nice little earnings gap. Thing is I really like seeing action that we saw like in Oddity. That kind of action makes me hopeful that we are in a bit of a better environment. Markets back over the 50-day. That's good to see. A stock like GH has a nice big base. If this thing will give me like a 5-minute opening range break. Roblox, let's take a peek. On earnings. Very cool. This one, for instance, is just a channel up. I have a hard time buying these gap ups personally, but something like GH is a little different in terms of the setup, right? GH is more of a flat base. Flat bases I like. Yeah, I don't know about CoreWeave personally. It's doing nice, but this doesn't look like too much info yet. Yeah, Meta's still below the moving averages, but not Microsoft. So, and we've got some important earnings today too. HWM. Yeah, a little on the slower end, but this thing's been a super nice trender for a while. Yeah, I'm still looking to add more hood over 51. I got some in after hours yesterday, 50.04. So we'll kind of see what happens at the open. And then, over this 51.07 looks pretty interesting. Yeah, I kind of feel that way now. But, you look at, Justin, you look at what Oddity did. You look at these names that are reporting pretty good earnings, or it's not even that you might say, oh, they're reporting awesome earnings. It's, you're seeing good reactions to the earnings. Forget the earnings report itself. Are you seeing a good reaction to the earnings? And if the answer is yes, then sometimes you just have to, kind of, as Christian would say, squeeze your balls and, buy your 5-minute opening range break. And if you get stopped out, you get stopped out. Here's the thing. It's like, if you get stopped out on like a break of low a day with a 10% position, it's not killer anyway. Like, it shouldn't hurt. Right? You shouldn't be in any kind of distress. Like, you're like, oh, I just took a big loss, because you're sized in properly anyway. So I think that that's really important. Steve-O, good morning. Yeah, I think it's possible. I think it's possible that the QQQs get rejected off the 200-day, but I've got 5 working longs, so I'm already operating behind profit, right? I've got shorts that have been working for months, like MU and Rigetti and SMCI, GRR, ESTC. So got shorts that have been working for a while now. And I've got CrowdStrike, Palantir. I'm up 20% in Palantir. So it's like, Am I going to argue with the traction that I'm gaining in my portfolio? Right? I'm up $100 a share plus in Netflix. Right? I'm not going to argue with that. CrowdStrike's working really well. Uber's working really well. And now Hood is working pretty damn well. So I'm not going to get too, how do I say it? Like, not really thinking about it too much one way or the other. I know the market could use a little breather, and I thought that was coming yesterday with that ass kicking that we took. But clearly, the bulls have another agenda, and they're driving the market higher right away. So if that's what's going on, and then you see a company like Oddity rocketing out of a really nice base, and then you see Hood taking off on good earnings, and you see, Baba coming out of a tight consolidation. And if things are just going to go, I'm not going to let them go without me. I'm going to continuously get my money in small increments to work for me behind traction, right? And every stock that I take, right, like Palantir, I'm out half and paid. Right? Uber, I'm out a third and paid. CrowdStrike, I'm out half and paid. Netflix, I'm out half and paid. So at this point, they're just riding ascending moving averages, right? Whenever the move stops going higher on those ascending moving averages, I'll be out. But if I've got tight setups, in a Hood, or let's say Toast goes next week, or let's say, Dash goes, or I get a pullback buy and a higher low setup in TTWO or something like that. And I can continuously add money to work safely, right? Let's say Tesla gets over 291, 292 for a break of the 200 SMA. Like, if I get setups that I understand and I can continuously get money to work for me safely, then I'm going to continue to be a buyer, right? And I'm not really worried about anything else. Right? Because the names that I already have, I've already locked in gains. It's like these stocks aren't coming back to my averages. They're being trailed by ascending moving averages, right? And my worst case scenario is that one of them gaps down huge on some whatever reason, and I get stopped out at my average. But money's already been made there. So I'm going to continue to treat every new position the same way I do anytime I get in any new position, which is, I need it to push away from my average. I need to buy it when the market's going higher. I need it to be in a good group. Yeah, gold took a hit in pre-market. Yes, it did. I kind of liked the gold stocks too. I thought like something like, WPM was acting pretty damn good. Excuse me. Crude oil also took a hit. But, on the flip side, Bitcoin keeps working. So, there are things out there that are just continuously working, and I can't really argue with that, to be honest with you. James Wilson. Good question. How many new positions would you buy at once or try in a day if you're getting stopped out? Okay, so if you're getting stopped out a bunch, what do you think that means? Does that mean that can only mean two things, in my opinion? Maybe another one, but the only two that I can think of off the top of my head. And that means either the market's not good that day or in general, or the stocks that you're watching don't have a clean setup and they're not pushing away from your average. So it's trying to break out and then it goes and hits low of day. Exactly. So either bad market or your timing with that particular stock is wrong. So one, I'm always trying to align my buys when the market's going higher. So I'm not really ever buying stocks when the market's going lower, ever, right? I need the market to be pushing higher so that if I buy a clean breakout, I'm giving my stock the best chance to work the day that I buy it, right? I don't buy stocks as they're going down. I buy breakouts, or I buy break of over prior day highs. I buy break of a flat base. I buy, maybe a stock is coming down, but then it's turning back up off of a level that I understand called an undercut rally, right? So I'm always doing things that I understand, but I'm doing it when in a market that is pushing higher, the market that I'm trading, like if I'm buying a gold name, I'm buying it as gold is pushing higher, right? If I'm buying a Bitcoin name, I'm buying it as crypto, Bitcoin's pushing higher. If I'm buying an oil and gas stock, I'm buying it as crude oil's pushing higher. If I'm buying a copper name, I'm buying it as copper's pushing higher, right? So always aligning myself with the market that it's in, right? I don't ever just say, oh, the market's bad. That's too generic. The reality is, what market are you trading? So that's number one. And then 2 is the timing, right? And then 3, position sizing. So if I'm getting stopped out once and twice in a day, it's probably not because the stocks that I'm watching, because I almost always do my job well in terms of scanning the market and knowing where money's going. So my job is to know where money's going, know where money's leaving. That's the real job. Clicking the button's the easy part. Truly, clicking the button is like the easiest part. You like my quote about swing position and investing yesterday? Yes. So I'm always a swing trader first, right? So my stops are always at low of day on a swing trade, or prior day low, or at like swing low. And then, if a stock is working, and it's earned the right to be a position trade, then I'm a position trader. And if the stock works even further from there, then I'm an investor. It depends. Stock maniac, always with the good questions, man. I don't know. You got the best questions. Under what market or stock conditions do you recommend using a 5 MA as a trailing stop instead of a 10 or a 20? I don't use the 5 MA as a complete trailing stop. I use it as to trim a position that I'm already in, because the 10 is still too far down, right? So for instance, all the stocks that I am in that found support at the rising 5-day, like Uber, Palantir, CrowdStrike, if they break their 5-day simple moving average, I'll trim a little bit more, right? But I never really get out of my whole position there. Hell yeah, Rico, appreciate that. What confirmation do I look for before entering a trade? Well, this is the thing. I don't really look for confirmation per se. What I really look for is, how's the market doing that I'm trading, right? How's the stock and the group that I'm in that I'm trading? So if the stock that I'm trading is in one of the leading groups, right, that's already some of the confirmation that I need before I ever even get in the trade. So 1, the stock is in a top 40 group. 2 is if it has a technical setup that I understand. 3 is if that technical setup is pushing out over a level that I understand, or going through a pivot that I understand. 4, am I sizing the thing properly? And 5, is the market that I'm trading it in conducive to allowing my stock to do what it was going to do? Meaning, if I'm buying a tech name, right? Like if I'm buying Palantir, is the QQQ going higher on the day that I'm buying it, right? So that's like all the real confirmation I need. Position sizing takes care of the rest. It's a great question though, Jack. Any interest in Reddit? Yeah, I got no interest in Reddit at all. It's not even on my watch list because it's got so much overhead, right? This doesn't look like one of the very best charts in the market, right? Uber, when I bought it, looked better, right? Above its 200, already near an all-time high. Netflix, when I bought it, right, over 1,000, already near an all-time high, right? Hood, when I'm buying it, already starting to push out earnings, better reaction to earnings right now. So even still looks a little bit better than Reddit, came down, recovered a little bit faster than a Reddit. Crowd, one of the very best names out there, already close to an all-time high. So there's better merchandise. I missed other ones like TTWO, right? TTWO right here at 215, 216. I was talking about it on this day too. And obviously it took off without me because I just didn't buy it like a total schmuck, but much better, right? Stocks that built a perfectly sideways base while the market was going down versus something like Reddit that just got absolutely smoked while the market was going down. Kind of want to avoid these. Now, I'm not saying it can't work later. It absolutely can, but it just has to be in a much healthier market. The market has to get above the 200. And then what you really want to see out of a Reddit is this is what you want to see out of a Reddit. One, gap up on earnings would be really nice. And then two, when the market's going up, Reddit goes up more, right? And when the market's going down, Reddit goes down less. Like, look at what happened with Reddit, right? Reddit gapped down yesterday and then closed right at the 200. Now it's gapping up a little bit today, right? A little bit. But now flip that around and say, what happened to Uber yesterday? Uber gapped down a little bit and then broke, what was that? Tuesday's high, right? On Wednesday yesterday. It gapped down just like Reddit and then took out Tuesday's high. Reddit was not able to do that, right? So which one's stronger? Just from a visual perspective, right? The one that's stronger is Uber over Reddit. So you would really want to say to yourself, how the hell do you get yourself into Uber? Not how do you get yourself into the laggard? You want to get yourself into the leaders. Like at no matter what cost, not obviously at no matter what cost, like buy it in the setup that you understand. Yeah, Alex, I don't ever really care to. I mean, I look at weeklies, but I don't really trade off of them personally. But I do look at them. I'd like a nice weekly chart in the ideal scenario, like an ideal world. Love Netflix. I'm sitting there with 1,019 average. When you talk about trimming at the moving averages, do you mean crossing intraday or closing below? Closing below. Yeah, it has to close below. I don't understand, Cass. What do you mean? What do I trade off of? Like my broker or my time frame? Yeah. Roblox can set up and go higher in time. Really nice gap up on earnings. $72. I mean, this is super gap up. But it's already just been in this channel. It's hard for me personally to buy things coming out of a channel, versus I look at something like GH and I say to myself, nice horizontal base. Much easier to manage risk in a horizontal base for me. Good above the line, bad below, right? Hood, similar kind of deal. Good above the line, good above. Horizontal pivot, bad below. Dude, shoot me a message on my DMs are open, man. Shoot me a message. I'm pretty sure I may have found you yesterday, but your Twitter name wasn't Black Cat, so I didn't just want to shoot a random person a message, DM on X. But you can shoot me a DM. My broker, I've got two. My fiance's got this TD Ameritrade, but I use Centerpoint and I use E-Trade. Yeah, ATGE is on my radar. I've got it here on my list. My list is getting bigger, but there it is. It's got to get going. At this point, it's going to have to clear, this 109.5 and get going. I could almost use an espresso this morning. No, I don't use Trade Zero anymore. I don't know how you know that, but that's how I know you've known about me for a while. Roblox looks solid, but you wish it had more volume? Dude, it's 8 o'clock in the morning. How much volume? You wait till the open. I'm sure you'll see if this thing's got more volume in about 30 minutes. It depends the stock. This is another great question, Stock Maniac, and I just think you keep them coming. Awesome to have you ask questions. When I'm using an ascending 5-day, how large are your trims typically? And do you use it for just one trim or for multiple trims? Okay, so good question. So typically when I buy a breakout, I'm looking for a trim quickly within 3 to 5 days, right? And now depending on the market and depending on the stock and depending on the setup, right? Like if this was a 5-month base, like it was on NVIDIA, I didn't trim any, right? 0 trims in 3 to 5 days. I didn't get my first trims off until $770, if I'm not mistaken. Let me see, actually. I can tell you in a moment if you just give me a second. So I will just trail, but normal circumstances, 3 to 5 days, depending the stock, I like to trim a third to a half, right? And then my worst case scenario, I move my stop, the rest on break even, right? The rest is up to break even. And then from there, if a stock just kind of continues to ebb and flow and find support on the rising 5 or the rising 10, or the stock's not moving too quickly, I like to then use the break of the 5 for a trim to get myself down to half if I'm not down to half. And then if I've got half left, I just trim off 20% and then continue to use 20% of what I have left, not 20% of the original. And then just use the ascending 10 and 20. And then under the scenario where a stock is incredibly strong, depending on the stock's average daily range, I will then trim more when it gets extended from the 50-day. So if the stock is let's say moves 4% per day and then gets 28% extended from the 50-day, I trim 20% of what I have left. If it gets 32% extended from the 50-day, I trim more of what I have left in 20% increments of what I have left. So for instance, Palantir is getting, extended. And if we start to, not quite extended, but if we were to get to like 126, I would start to have to trim more and more of what I have left. Yep, Black Cat, I see you. I don't really think about volume when I'm buying a 5-minute opening range break. I want to see a pickup in volume. But the reality is, as long as you're buying a stock in a leading group in a healthy market and it's breaking through your pivot and it's got enough volume for you to not move the stock yourself, that's all I really care about. If it has to have like a certain run rate when I'm getting it, I care about volume after I buy it, right? And maybe I don't even really care about volume after I buy it. I just want the damn price to push away from my average, right? Because for some stocks, dollar volume means different for some stocks versus others. Like Oddity, traded huge relative volume yesterday to its past. But like if we're going to compare it to like a NVIDIA in terms of dollar volume, it's peanuts. So I don't really care too much about like the volume that's coming in right on a 5-minute opening range break. But obviously, if the market is healthy, it's pushing through that pivot, it's in a good group, right? So it's like a stock that wants to go higher, then you don't really got to worry about it too much. Just buy it through the pivot, set your stop at low, size it properly. The rest will take care of itself. Execute in a good market. Track relative strength in a bad market. Don't trade it. And then execute in a good market. Yeah, that's the account that I found too, Black Cat, on X. So you could shoot me a DM from there. My opinion on Tesla, the same opinion I've had on Tesla for the last 2 weeks. And I've been watching it like every single day. It needs to get above the 200-day. If it cannot get above the 200-day, I don't care. Right? Like I've had this little horizontal line on my chart, way down here. The only other time I would have gotten Tesla was over 259. I put it on the watch list in the Discord and I had it on my personal watch list, but I was traveling on Friday to Miami. So I missed this awesome move. Otherwise I would own it from 259, 260. What do I think of Meta's CapEx? They're increasing CapEx, so that's good. That means they're going to be comfortable sending you money or sending you money. They're going to be comfortable spending more money, and that's going to directly benefit in NVIDIA, which is part of the reason that I thought NVIDIA was going up yesterday. So good. It was good to see them reaffirm and even raise CapEx spend, for this year. So that's good. It means that they don't really care about what's going on with tariffs. They're still going to grow their business. Dash does look pretty good. I agree. It's looking better. I mean, I don't want to get too excited. It's in a long list of stocks that have made the cut. It's back above the 50-day. It's shaping up pretty well. It doesn't have massive overhead. Found support on a rising 200. It's building out pretty well, but I'm not going to get too excited just yet. So, yeah, it could be. Yeah, it could be the last time Meta talked about CapEx. Yeah, it could be. But I still thought it was positive, right? They're going to be spending more money. They're telling us that they're going to be spending more money. That is good for a company like NVIDIA. So how that's interpreted, I have no idea. Is this going to be like before? I have no idea. But it'll show up in price. Reality is the market could use a breather anyway. So if the market pulled back, you wouldn't want to be like, oh, it's because Meta talked about CapEx, right? It's just because the market could use a breather anyway. I don't want a long CoreWeave, no. It's not a setup. Guys, think about it like this. As a swing trader, you only need 8 to 10 stocks, maybe less, maybe 6 to 10, depending on position sizing, to fill out an entire portfolio and be on leverage. Do you really feel like CoreWeave is one of the 10 best companies in the world, or 10 best setups, or 10 best stocks? I don't. Could it be later down the road? Yeah, maybe. But I've already got 5 stocks. I already own 5 names, right? I already got Uber, got Palantir, got Netflix, got Hood, got Crowd, right? I missed Take-Two, TTWO, right? I missed Baba through the pivot that I wanted. So it's like I missed TGTX. Like those are 3 names that I could have, right? And now I would have 8 names. And now if Tesla breaks back through the 200, I could have 9 names. So it's like, you'd only have space for 1 or 2 more. Where does CoreWeave make the cut? Yeah, Baba could be a new setup. Looks like it to me. Yeah, Spotify's another one. I wanted it yesterday. I mean, I didn't want it yesterday, but I should have bought it yesterday going back through the 50-day moving average. So there you go. You would have, and I've been talking about Spotify for forever. I think that the company's awesome, right? Nobody listens to more music than me, I don't think. I'm in the 0.5% listeners in the entire world. So, like I don't understand where you guys think CoreWeave would ever make the cut. Like there are much better setups out there than a CoreWeave. I mean, fuck. Even TJ Maxx, excuse my language, looks better. Even TJ Maxx looks better. Yeah, Spotify free cash flow is going nuts. I don't want to own TJ Maxx, but it looks better. It's just slow as shit. But you guys get my point, right? It's like there are again, Spotify, maybe PanW, maybe Zscaler, maybe Toast, maybe Oddity, maybe Baba, maybe Melly, maybe Okta, maybe Hood, maybe Spotify. It's like, and I already got 5 names. I'll only have room to add to those 5 names and maybe 5 more. And I missed Take-Two, right? I missed my initial Baba entry. It's like I wanted Baba at like 111.50. I wanted NVIDIA at 99.5. Now, again, those aren't ideal setups, but those were higher low setups to me that at least I understand. I would like Tesla back through 291, 292. So it's like, you could already have a bunch of names. So yeah, CoreWeave wouldn't make the cut. Baba is very tight right now. Spotify looks good too. Spotify does look good. This FTNT looks good. Zscaler's been acting great. So it's like CoreWeave, recent IPO, some funny business going on over there. If you guys haven't been paying attention, nothing special. Even GEV, I think this is a nicer setup. Nice flat base on earnings. I mean, this was beautiful. My view on MSOS, in order for MSOS to go up, I might have to start smoking a lot more pot. I'm kidding. I don't actually smoke. I quit. But yeah, we might need to start smoking. You wish Hood went sideways a little bit more? Yeah, but if it's going to gap up on earnings and go, I'm not going to miss it. That's for sure. Yeah, if it's a recent IPO and it's spready and illiquid, I think trades $53 million a day. There's better stocks out there than this. And one day this thing might go way higher. But for now, you don't need to own it. Look, even this WMB's got a way nicer chart. Huge base. These cigarette companies doing way better too, like BTI, MO, PM. Look at these things. Hanging out right at highs. Is that supposed to be bearish? They're slow, but slow money better than no money. Tell you that. Oh, you're good, dude. Don't apologize that you're late. TRP. Yeah, TRP. TRP and I think it's fine. I don't think you need it. The only reason you would think you need it is because you're trading with a smaller account, I'm assuming. What are my thoughts on leverage ETFs like Robin versus Hood for swing traders? Because Hood moves plenty fast. Moves 6% per day. I don't know why you'd want to leverage that up any. Also, I think these leverage ETFs deal with some decay. I could be wrong, but pretty sure like any ETF that's leveraged deals with some decay. So just be thoughtful of that. I mean, I don't think you need it. I mean, Hood already moves plenty fast. I mean, unless you feel like you need, that's like sprinkling a little bit of crack inside your Red Bull can. It's like, I don't think you need to do that. I think you're going to be just fine with just Hood alone. What music am I playing lately? Man, I play all sorts of stuff. I do like my hip hop, but I don't really listen to like new age hip hop unless it's like, I do like Future, but I'm more of like Eminem, Jay-Z, The Roots, Rakim, Kanye West, kind of hip hop, but I listen to everything, man. I love Van Morrison. Van Morrison's one of my favorites. Yeah, DMX is fine, but sometimes, it's can get a little much in my ear. You know what I'm saying? No, but he's good. DMX is one of the greats. I like all music. You don't become a 0.5%. I mean, I literally just posted it yesterday. That was from last year, and I probably am listening to more music this year. I was like in the top 0.5% in the world for music listeners. So I listen to music in my office. I listen to music in my car. Sometimes I listen to music when I'm taking a shower. I just love music. All right. Well, I kind of see that there's Bitcoin's going up this morning, up nicely. It's up what gold is down. So it's interesting to see. Crude oil had a nice little washout this morning, getting picked up on some pretty good volume. S&P 500 is up. NASDAQ is up. And I don't really see a ton to do at the open. Just focus on my few focus on the few names on my watch list and see if I can get some more exposure. Yeah, the way that you deal with that is the way that you deal with your leveraged ETFs is you just size them down, right? Like if you were to want a 8% position in Hood or 10% position in Hood at like a 6% average daily range, well, then you only need a 5 or 6% position in a stock that moves 12% every day. What was my biggest and worst trade ever? That depends. Like dollar wise, I mean, I've lost 7 figures on a trade. So I guess you would say that, but that wasn't I've also given back 7 figures on a trade twice. And I still did really well on that trade. It depends. Like for me, my biggest lesson learned in a trade was on CCJ gap down was it the end of 2022, I want to say. Was it the end of 22 or 23? I don't really remember anymore. CCJ, I got caught in the $25 to $20 gap down way back here. When was this? 22. Yeah, ends of 22. I had this right here, and I had 50,000 shares, and I lost $250,000 on going into October 12th. And obviously, it came right back. And I took my loss, and then it consolidated, and then it was off to the races for this thing. And I had an awesome thesis that uranium, if you go back and look at my Twitter, I used to talk about uranium all the time because I thought, the world would have to be powered on nuclear power plants in order to get the electricity, that we would need to do, pretty much everything. And yeah, I learned my lesson that being early is also being wrong. And at the time, it was way more money that, I really shouldn't have been losing on a single trade. So that sucked in a few ways for me. But it made me a much better trader. So, I mean, you could say that's my worst trade. My best trade, my biggest dollar-wise, I don't know, a couple $1,000,000 on NVIDIA. The breakout. I've also had, a couple $1,000,000 trades on SMCI twice on the short when it went up parabolic. I had a 7-figure trade one time in a single day on MSTR short. So it just depends, right? I wouldn't even call those my best, but they are some of my biggest. NVIDIA was really nice because I was super patient with it. NVIDIA was awesome. How do you psychologically regain the confidence to size up again? Oof, like after CCJ, man, that took a while. That one took a little bit. That one shook me to my core. Because again, at the time, losing $250,000 like that at an overnight gap down was tough. And 2022 was already a tough year. So, it like was the cherry on top to our already a difficult year. I mean, really slow, because like at the end of that year, I also got myself into NVIDIA long at 167 or 163 bucks, something like that. And then it really got my 2023 started in like great fashion. So slowly, I always told myself I wasn't going to make all my money back right away, right? It was going to have to be off of a series of really, really, really good trades. But what CCJ taught me was that being early is the equivalent of being wrong. Like, just because you have the right thesis doesn't mean that you can just up and be super early on the trade. Yeah, car could go into stage 2, but this looks like shit with tons of overhead, right? The stock used to once be 500 bucks. This looks terrible. It could go into stage 2, but here, this is what I'll tell you, Steve-O. And this isn't me picking on you. This is just me being brutally honest because I like you. When you are a swing trader and you're trying to build a portfolio, right? You have to ask yourself, what's in the top groups? And just for discussion's sake, I'm going to take a peek here. CAR is in group number. Okay, so it's getting a little bit stronger, but on a 3-month basis, it's group number 95 out of 166 and 60 out of 166 over last month. So it's getting a little bit stronger, but it's not even in a top 40 group. And then secondly, is this one of the 10 best setups and one of the 10 best stocks that you're seeing right now? The reality it's not, right? What about CrowdStrike a week ago? What about Palantir, a week ago? What about Hood maybe today? What about Netflix on the earnings over 1,000? What about Spotify yesterday? What about Uber, around 75 bucks? What about a stock like Melly? What about TGTX, 6 or 7 or 8 days ago? What about Baba? What about Shopify? What about Zscaler? What about Toast? Right? What about, like, these stocks weren't even under their 200 basically, or have reclaimed them really quickly when the market was correcting, right? And then as soon as the market started to go back up, some of these stocks like a Palantir never even got down to their 200, right? This stock was so strong compared to the market. It didn't, like, the market broke. It's still not even above the 200, and Palantir, just because the market's been bouncing a little bit, is almost back at all-time highs. So, you don't really want to be dealing with stocks. Like, let CAR do its thing. Go back and study charts like AMR. Go back and study charts like DAC and just zoom out on them, stick a 200-day moving average on them, and then just say to yourself, look at how crazy this thing went. Or even Carvana, and say to yourself, when it got over the 200 and when it's set up properly. I mean, yes, Carvana was once $3, but I thought the best setup on Carvana was in the 50s, right? Not at the very low. I thought the best setup was down here. Let me show you. There was one of them. Big old cup and a handle, right? Kept building higher lows. Your 200 is now in an uptrend, right? And then right in here, pops right back up, gets above all moving averages. Here's your earnings gap up. There you go. February 23rd, 2024, and the stock is gone. And then what do you get? Another earnings gap up. So now it's just a matter of hunting down some setups. Look at how tight this thing got in here. Right? Look at how tight this thing started to get against moving averages. Holding the 50, surfing the 50 in a clean uptrend already. And then this thing is off to the races. Right? You don't have to be early on CAR at all while it's just trying to get over a still downtrending 200, right? You don't need to be in it at all. And you're finally in the profit on rubric. Yeah, don't be buying stocks that are going down. Buy them as they're starting to turn back up. Very nice for Meta too. Meta pushing higher here. Guys, I'm about to get out of here. I got to go into the room and start the live stream there. But yeah, I actually built a model book myself, Steve-O. I built myself a model book. So Great question. I have not. That's actually, I would be nice to, but the software that I have to upload on my trades also contains all of my day trades from back in the day. So all of my stats are totally skewed. I would have to like start, like a new journal effectively with TraderView because like my risk to reward, my win rate, I used to have like probably a 90% win rate when I was a day trader because I was just scalping. But I love you guys. Thank you guys for showing up. I appreciate you guys a ton. Tomorrow is Friday. I will be back on as usual, 7:30 Central Time, 8:30 Eastern, 5:30 Pacific. Somebody put me on the damn radio. I'll be back on same time as usual, about 50 minutes or 1 hour before the open. And I look forward to seeing you guys there. Thank you guys for the questions today. I appreciate you guys a ton. And we will see you guys tomorrow.